one day you will have or already have a child or children, right? And they will grow up speaking about their background and upbringing and what their experience was like, which means you have an opportunity to build and shape not just the future of the next generation in your legacy, but also the future of society, right? And if that's not executed properly, they will grow up talking about their poor background, and their poor background will be you and the choices you're making today.
Happy New Year, Market Hustle community. This is episode 65. I hope you all had an incredible time with friends and family. For those of you who are new, welcome to the podcast. My name is Josh. I'm the guy behind the Market Hustle. I started the Market Hustle back in 2019, so it's been quite a while, quite a lot of time, to help self-managing investors cut through the noise and build long-term wealth. And since then, the Market Hustle has grown to over 1 million on Instagram. Today, we got the full podcast team here, and we're going to kick it off a little bit different. 2025 just wrapped up, and before we actually look ahead for some of our goals in 2026, I want to take a minute to look back because there were some big major moves in 2025. So we're going to go over some of those. For example, the S&P 500 ended up over 16% in 2025. Not a bad year at all for long-term investors, especially with all the choppiness. Warren Buffett actually officially retired as CEO from Berkshire Hathaway, the end of an era for an investing legend. And then, of course, one thing that really hit the headlines towards the end of December, silver absolutely stole the spotlight in 2025, up over 139% in a single year. I know Pierce is really happy about that one. But before we dive into the full-on topics and start to kind of discuss them a little bit, let's check in with our co-host and see how they're all doing. Let's start with Baafi. Baafi, how are things going in New Jersey?
Pretty good, man. Happy New Year, everybody. Really excited for this year. Things are good. Can't complain. As you guys know, in some of the previous episodes, I did mention that we've been in a transition phase of moving to the house a little bit further in Jersey and Monmouth County specifically. So we're fully moved in, settled in, been enjoying the Christmas, the holidays. We've had a few snow moments here, which has been kind of nice. Gave us a nice white Christmas, so that's been cool. So anybody that's listening online, if you live in the Monmouth County area, please send in some recommendations, whether it's landmarks, restaurants, activities, things to do. I'm more than open to try everything.
Well, congratulations on the big move, Baafi. Glad you're kind of getting settled in for the new year. What a great way to start off 2026 as well. Let's jump over to Pierce. Pierce, how are things going in Southern California?
They've been surprisingly rainy over the last 2 weeks. Other than that, I mean, dude, just enjoying the new year, setting some goals for this year and gonna hit it hard.
Love it, man. Love it. That's kind of interesting. Here in Washington, I mean, it's known to be rainy, and we've actually had it pretty clear the last week and a half. So, pretty thankful for that. Fernando, how are things going in Florida?
Things are good, man. I think just, going from 2025, 2026, like I think it's such a quick change. For some reason, being on a Wednesday, it feels like it hasn't ended because we haven't gotten to like today, which is a Friday for everybody listening. But yeah, it was a quick change, and I think just looking back, just appreciative and looking forward and organizing, just like Pierce, right? Trying to get a grasp on a vision or trying to see what 2026 will look like for me from all perspectives. But everything's good, man. Family's health is good. So
Awesome, man. Yeah, that sounds great. And I think it's awesome. Like this episode specifically, we're all going to be diving into some of our goals. So everybody listening in, make sure you're also thinking, if you haven't set any goals yet, like take some time, especially after this episode, take like 10, 15 minutes and just open up the notepad, notebook, or even on your iPhone, open up that notepad and just write out some things that you want to accomplish. I think taking the time to actually set something tangible, especially specific goals. Like, do you want to open up a Roth IRA or start learning about investing or open up a high yield savings account? It's like the more tangible you can get with your goals, the easier it's going to be to not let this year just kind of fly by. Because look back at how fast 2025 flew. And, here we are, another year. But nonetheless, it's great to be back. We're hitting the ground running quickly. At the time of this recording, it's the second day of January. This episode will probably be out next week, but just letting you know, we're not wasting time. Like we're making sure we're hitting the ground with momentum with this Market Hustle podcast. We had a big year last year, so let's make 2026 even bigger. That being said, so yeah, let's start with this. Like the S&P 500, the stock market ended up over 16%, and historically, that's an above average year. If you know anything about the S&P 500, long term, it averages about 10% per year. Of course, some years are much higher, some years are much lower. But nonetheless, 2025 was actually an above average year, despite all of the choppiness that we saw in April with the tariffs, all of the uncertainty, the political chaos, and just the uncertainty in general. There was a lot of it, especially on social media. And I think one thing to me that stands out is it's a testament to why we preach or just talk about having that long-term mindset so often is because it's easy to get caught up in the doom and gloom algorithms on social media and start to question if what you're doing is the right move and then end up making a decision that you might regret months or even years later. How do you guys kind of like what's your kind of your reflection on the S&P 500 ending over 16%, and maybe what are your thoughts on just the whole year as a whole now that it's behind us?
I think we definitely keep hitting highs on the S&P 500. This year, what was interesting is that we didn't go as high as the year like before. And I'm thinking that we stay in a quote unquote high, or did we just hold at a certain, we were just kind of maintaining. And that's like, I'm really curious to learn more, I guess, today on that. Maybe see your guys' perspective on what your thoughts are. In my perspective, I think we're still on hold. We could have done better. Uh,
Sure.
yeah.
It's always that question of like maybe if the tariffs didn't happen, we would have ended higher because there
Yeah.
was a lot of speculation and
Right.
just uncertainty in the business environment that causes investors to kind of pull back and like maybe I should get a little bit more defensive.
Yeah.
Yeah. And I think to be honest, I'm actually quite impressed with the performance, given a lot of the uncertainties, all the headwinds, right? All the fear, the tariffs, the trade war. Like, I mean, think about it. There's wars happening right now. It's almost like we've gotten so accustomed to just, the Ukraine war and other stuff going on in other areas, the Middle East, and so so for the market to have produced what it's done, which is above average returns, right? Is actually quite impressive, right? Unemployment ticked up a little bit throughout the year. Cost of living is high, right? Jobs are a little bit, tough, and so, especially if you're looking for quality jobs, and the way that income wages haven't kept up with cost of living, especially for people that have serious responsibilities. I think, 16%, not bad. It almost got to like 1920, at some point in December. So we were pretty close to hitting another pretty heavy hitter year, but really, really impressed with it. But I will say that it's interesting to kind of see it in the order of the asset classes, how things have performed, right? You look at commodities, whether it's your gold and silver, which is Pierce's domain. I mean, he's been playing around in that sand for a while, so I know he's been enjoying that ride. And then that was followed by stocks, and then crypto tend to, I guess the main two really, is Bitcoin and Ethereum, kind of underperformed relative to the other asset class. So it's interesting to see some of the shifts and the decisions that was made throughout the 2025 year on a big scale. And I'm curious to see what is going to happen in 2026, you know?
Yeah, it's a good question. And I think especially like seeing how international stocks performed. Many countries kind of outperformed the U.S. stock markets this last year in 2025. And historically, the U.S. stock market has kind of come ahead over the long term. Like if we look out like 10 to 15-year time frames, the U.S. stock market tends to, or at least historically, it has outperformed. So this year we kind of got something a little bit different, which caused a lot of investors to kind of step back and reflect, like, should I have some exposure to international stocks? Maybe question their strategy altogether. So I'm curious, maybe Baafi or Pierce or even Fernando, like, did you guys like how did you guys kind of feel like when we started to see that shift towards more international stocks and maybe away from the U.S. stock market? Like, did that change your thoughts on your strategy at all?
I thought it didn't really change my thoughts on strategy at all, because if you look at it, the US market is global economy, global market, right? And so I think our footprint and impact it has on essentially all central banks, all businesses, all nations, policy in general, right? Like we essentially kind of drive, it's like a trickle down effect and impact on whatever happens here, or what we do here impacts everywhere else in the world as well, right? And I think China in particular is interesting because their market is not as accessible, as exposed to the global population in terms of like a very free flowing market. Things are a little bit more controlled. the way I look at it, all the nations' access to the U.S. market and economy is is an incredible advantage to those nations. But to see some of the indexes in other countries, whether it's Canada, whether it's in the entire European region, right? I mean, look at Japan. Japan is coming off a 30, 40 year like biggest L you could possibly think, at least in our lifetime, and even some of the people that came before us lifetime. And the fact that they've been able to kind of bounce back. I mean, they've raised interest rates twice, and they're still hot. Like, this is like a one-way street. It's going straight up. So I think it hasn't changed my investment philosophy. I think the only thing to kind of think about it a little bit for everybody is essentially how do you have a little bit of exposure outside of, right, the U.S. market alone? Because yes, the U.S. market is global economy, but it doesn't necessarily mean that having some exposure to other countries or other regions is a bad idea, because emerging markets is gonna, start to get bigger and boom even more, especially the way technology is going, AI, automation is gonna cost a lot less over time to really produce certain level of quality and have products and impact, right? So I think having a little bit of exposure globally is going to be important.
Yeah, well said. I think it really highlights the importance of diversification because look at 2025. Like we have precious metals that basically stole the whole show for the year. And if you would have asked a lot of people in the beginning of January of 2025, like, hey, what asset class do you think is going to do the best? Or like, what's going to perform the best? A lot of people probably were voting crypto. Like there's a lot of speculation that Bitcoin was going to hit, 200,000 plus. And that actually ended up being one of the asset classes that ended the year negative. It's not to say that it'll be negative every year. It's just, I think what it really points out is that markets operate in cycles. Right? Some years the S&P 500 might crush it. Some years international markets might crush it. Some years precious metals or even crypto might crush it and steal the show. The one thing that I think you can take away as an investor is like that's the whole purpose of diversification is positioning yourself to benefit from different market cycles. And of course, that's why it's so important to understand your own goals, your own risk profile, because somebody, like Baafi or even myself, like I'm much more comfortable having heavy exposure to the US because it fits my personal risk profile. But for other people, they might want to be more diversified across the world just because they don't want to take the additional risk of the US underperforming, maybe the next couple of years if something happens. But of course, like the more you research, the more you study different strategies, that's the whole purpose. Like eventually you'll find something that fits your style, like your risk profile. Like that's the whole goal. Whether that is adding a little bit of spice to commodities such as gold or silver, or having some exposure to Bitcoin and crypto. I think the most important lesson is you don't want to put all your eggs in one basket. You want to make sure you're kind of spread across a strategy that works for your life, because what works today or what did really well last year won't always do the best or really well next year. So that's just something I would kind of chew on if you're a new investor, because it's easy to get caught up and see what did really well last year and be like, okay, I got to reposition my portfolio and put it all in the silver, like 100% in the silver. That's the one that did good last year. 2026, this has to be the year where this continues on. It's like these market cycles can shift pretty quickly, and what everybody thinks is going to do well in 2026 or 2027, all these guesses and speculation won't always be what happens in reality. So something to kind of think about. Fernando, how about you, my friend? Like, what was your thoughts on how the year
Yeah, I
looked?
was
And for
just
context, everybody, Fernando's more actively involved with the markets, so he definitely sees things a little bit different than myself, Pierce, and Baafi. So let's get his perspective.
Yeah, I was just kind of thinking, like, as you guys spoke, like, I don't have international exposure. I think that I've been looking into it more. I see it as something I have to learn, right? I think I've been too involved in the active trading in the US. And of course, like, I think Buffy mentioned it, right? I think the US carries the weight globally, and we are still standing, at the heaviest weight where whatever happens here trickles down to other countries. But what I'm starting to see is a little bit of loss in the value of the dollar, and that can cause other countries to rise, like the yen or other currencies to move up, and that's why they're raising interest rates in those countries, and some countries are lowering interest rates, like in this country, right? But whenever that happens, assets like the one that Pierce loves to invest in rise, and also, well, when that rises, when gold goes up, the dollar goes down, because it's it's not connected to the gold standard as it used to be. So that's kind of like my 2 cents on that. But I still have to learn
Yeah.
uh, in the international aspect of all this. I do know that I know certain people that are in that market, and you can kind of read the future in a way because these countries are ahead. I mean, some countries are already in tomorrow, right? So whatever happens there, can affect the US. You can kind of see the future in a way.
Yeah.
Like Japan's market, they're a day
Yeah,
ahead.
Yeah.
They're open a day ahead than the U.S. market. So from an
exactly that.
active standpoint, yeah, I could see that because they're kind
Man,
of reflecting
they
what's
got a
going
cheat
on.
code, man. Yeah, yeah. They're like living in the future. We in the past, dude.
Yeah, like whenever I think we went into war with Iran last year, I don't think we went to, I think they would go to war, and not to talk political, but that happened like, a day forward. Nobody realized that happened like tomorrow over there. But today, like we were here today and we didn't really get affected. The market didn't get affected till like ours opened up. That's kind of what we got to see. We still have that 9 a.m., 9:30 a.m. opening time.
Fernando, you said something I thought was actually interesting. You mentioned the US dollar, and then obviously, people just kind of flooding a little bit more towards gold, right? Some of the old and true ways of kind of really holding,
Yeah.
certain value until things kind of simmer down, the dust settle. I'm curious to think or know, and maybe Pierce, you could probably chime in on this a little bit too. It's like I'm trying to think if there's a strategy of people flooding to gold and silver in anticipation of potential L's to come, where there's like they're thinking, they're assuming that maybe in 2026 or 2027, right, we can get some really heavy corrections or even maybe potentially a deep recession type of thing. And so, because I mean, the way gold is, I mean, we've seen gold go crazy, right? Silver going crazy. And it seems like it's happening at a different velocity currently. So I don't know, Pierce, what are you kind of seeing in that world?
Oh, dude, it's actually kind of crazy. I mean, I've been following the US dollar very heavy. Just like I've been in emerging markets. I think our first portfolio update we did in like probably the first what's in the first 15 episodes. I was in emerging markets, gold and silver. And those are my things. I look at it very easily and say, hey, is China going to go anywhere? And it's like, well, if it does, then the rest of the world's screwed too, because that means something happened, right? And it's just simple things like that. But to your point with gold and silver, it's not like individual investors like us. It's not my silver holdings that's making the prices of silver drive up. It's institutions, and institutions on a much larger level than I could ever do. And it's these people who are buying hundreds of millions of dollars, hundreds of millions of ounces of these precious metals that, if you look at the holdings of who holds this stuff, and most of it's all paper, paper gold, paper silver, which is cool. I mean, to me, I don't think if you don't own the physical asset, you don't own it. I mean, I guess you could say it's different than stock because, obviously, yeah, I don't have like, the old stocks, like, how Coca-Cola used to have, you actually get like a stock piece. But
Right.
people are, like you said, it's like a hedge against it. And I think that people are speculating, and it's not necessarily just individual investors, that, people who have teams of hundreds and hundreds of the best economists of the world, they study this thing, this is what they went to school for. They are suspecting something. What that is, I don't know. Silver has real world value. Like if you look at anything from the computer you're talking on, the phone, the microphone, everything has little pieces of silver in it. So silver has real world value. Gold, I guess it does too. I mean, you need it in electronics and stuff like that, but it's not as needed as silver is. But I think that there's something going on, like Fernando's point with I don't know. I think that the world is de-dollarizing
Mm,
in the best way possible right now because we have so much debt. Back in the 80s, the United States was the largest creditor nation, right? So we'd give out the most money and people would pay us back. And that switched now in 2026, we're the largest debtor nation. We have 34, 35 trillion dollars in debt, whatever it is. And I think that the world is starting to notice that the United States is maybe not as good for it as they used to be. And so they're trying to back their own currencies, or maybe not their currencies, but they're trying to back themselves by silver and gold. And if you look at it on January or on December 28th, I think it was, China came out with something that they're not going to be producing silver to the Western, to the West at
mm.
all. And so it's going to be based in hometown stuff to where I don't know. I think the world de-dollarizing for a way to kind of hedge against something. How the
Mm.
United States is going to do that, because you can't throw the United States out of the playbook. We're the big dog
Oh
here.
yeah, no, no, yeah, yeah.
You know,
We
you
got
can
bigger
never
problems
start.
if that can happen.
Exactly. So I don't know, but I do think something is happening, maybe something that I
Mm,
truly don't understand. Yeah, I've been reaping the benefit of it, but I'm still trying to get a grasp of why the health silver's up 139% year to date.
mm.
I mean, I know there's
Right.
real world value, but and same thing with gold. You know, I've been posting about silver since $25 an ounce and gold since $2,000 an ounce. And so I just don't, I was looking at that because I look at it as a hedge against inflation, right? A hedge against, the world de-dollarizing. And I don't know, but there's something bigger to play. I could go on and on, but yeah, that's kind of
Yeah, no, all good. I think that's it's like the analog universal understanding
it
of
is.
like, okay, no matter what happens, boom, right? Like this part here, whether it's gold, silver, commodities, those special, like gold specifically is like, okay, it's universally like agreed upon since civilization that, okay, this is where everything break loose. This is where we're gonna at least store value for a little bit. And it's aside from just the dollar devaluation and everything of that nature. I mean, everybody, every nation, every continent, that is one thing that at least we can all as a planet agree on. We suck on agreeing on stuff, but at least that we can agree on.
I actually made a post on silver, what was it, about a week ago. And when I was diving into things, a good way to think of silver is kind of like gold on crack. Like when gold starts to run, silver is kind of like the one that's just kind of like
Uh,
going exponentially higher. The moves are a lot more volatile, if you will. The one thing, if you kind of take a look at precious metals, is again to Pierce's point, they are seen as like a hedge in the Wall Street world and just investors in general, to where these big firms, they have lots of cash. Like think about all the cash that these big hedge funds have, or even these big banks, billions, if not trillions of dollars, just kind of sitting, waiting to like make a move with it. And when they see interest rates, pressure to push interest rates down, and more stimulus and like just spending by the government kind of come out here. My opinion is these institutions try to like, hey, maybe we got to put a couple percent of our billions or trillions into something a little bit more of a hedge. That's my guess to why we see gold kind of running in 2025. It's just like the big money that's sitting in a lot of cash. It's just kind of putting a little bit into these assets to hedge a little bit just in case something happens. Like that's literally their job. They're called hedge funds, is to plan for the worst case scenario. But historically, when gold and silver have these crazy runs, they have a track record of crashing just as fast,
mhm.
especially if confidence kind of returns in the system. I mean, we saw this back in 2008. Everybody thought the financial system in the US was going to completely blow up. And whether you agree with how things were handled or not, eventually confidence did return. And we saw assets like silver and gold correct severely. My personal opinion is like, I don't think it's bad to have a little bit of exposure to gold and silver if you want to hedge against that scenario. My personal opinion is I think assets and owning businesses is the way to go, because think about it. These massive businesses are experts at navigating whatever kind of gets thrown their way, whatever crises get thrown their way. And when you're investing in something like a business, you're kind of putting your money on them to survive if a currency crisis does occur. Maybe they kind of pivot to different currencies, or if that doesn't occur, like if we see the system kind of revolve back, they're going to be able to benefit from the system kind of running smoothly in a good flow. So like either way, when you're owning businesses like quality businesses, the reason why these companies that we see in the S&P 500s are multiple billion-dollar companies is because they're great at adapting. They're good at finding ways to maneuver through whatever gets thrown our way. And I think one thing is certain in 2026, 2027, 2028 is that there's going to be stuff that gets thrown our way that we didn't even expect, right? There's going to be different scenarios when you're investing, like as a especially us like self-managing investors. You want to position yourself to benefit from different scenarios, hence the diversification aspect. But you also don't want to position yourself to where you're going all in on one potential scenario. Like of course if it pays off, like let's say you go all in on silver in 2026, we see another 300% run, like cool, like you would get that big win. At the same time, if that doesn't happen and you positioned all of your money and all your capital in just one asset and then it gets wiped out, well, then you're gambling and you're screwed, right? So that, again, this is why diversification is important. Although people tend to roll their eyes at it, it's so that you benefit from whatever cycle gets thrown our way in the next 2 to 5 years. So always interesting to kind of talk about this subject, and it is cool. Like I mean, Pierce. we've had quite a bit of episodes where Pierce has talked about silver and he's shared his thoughts, and he had an incredible year in 2025. And it's going to be really interesting to see how things go in the next few years with this commodity.
I'm still a stock guy through and through, though. I will make that known. Yeah, silver and silver and shit it's gone up, but I mean, I still believe stocks is the way to go. I mean, I don't know, but yeah, I still like stocks.
What, Pierce, if you don't mind sharing, what percent of your portfolio is in commodities or like silver,
Oh,
gold?
dude, not much, maybe like 6%.
Cool.
It's just like the thing is, it's everyone, they don't know. Some people have exposure like 6% in crypto. I don't own
Yeah.
any crypto, so that fills my void, I guess, for crypto.
But
So
you physically own though, right? Like,
yeah,
yeah,
no,
yeah.
I have a giant safe locked in my house that if you wanna rip it out of my house, you gotta blow up the whole house and it still won't come out.
Yeah, and there's like two ways you can look at gold and commodities too. Like you can physically hold on to it, like kind of Pierce has, right? You can have exposure to it as well, to the markets. Like there's companies that hold gold today, and I think a lot of the uncertainty that has been going on with gold and silver in the past year has been because all of these institutions that hold gold, I think there's one in New York that hold massive amounts of gold. They've been
Yeah.
shifting and moving gold around. And
Yeah.
whenever you do that, you're kind of making this earthquake, like financial earthquake, that people think like, okay, why are they moving the gold? Why are they moving the cheese? Like like something bad's gonna happen. And that's why this like big boom of price like yeah, increase has been for gold and silver in the past like 12 months because there's been a lot of shift and then you add the tariffs on top of that which add uncertainty, more uncertainty. You have this war, invisible war of tariffs, and countries are, attacking each other with tariffs. We've never seen that before either. So that definitely makes people think twice and
It
start.
makes them play more defense, right? Like,
Oh yeah.
especially
Oh yeah.
like you said, these big institutions that have multiple billions of dollars, if they see these tariffs being thrown all over the place, and realistically, we don't really know how this is going to play out over
Mhm.
the next 2 years. It's like that institution, like these institutions, they're going to be smart and maybe put a couple percent of their multiple billions of dollars into something like gold and silver, which of course probably contributes to that run. And then it hits the headlines, like everybody starts talking about it, then everybody starts getting interested in it, and it kind of builds this cascading effect, right? I think it's going to be an interesting year nonetheless, just because of the different dynamics at play, the different market cycles. But what can you do? I think as investors, we have to control where we're at and position ourselves again to benefit from different cycles. Like if you're somebody who wants exposure against the financial system, maybe you have a percentage of your portfolio in crypto. Maybe you have a percentage of your portfolio in gold and silver. Again, investing is a personal thing. Like you got to figure out what works for you, and taking the time to research, different asset classes is what's going to make you a better investor to begin with. I mean, we've got plenty of episodes where we've talked about many different parts of the markets, and we've had on some incredible guests. So if this is your first episode listening, make sure you listen to the rest of the podcast because the more you learn, the more you dive down the rabbit hole of soaking in different perspectives, the better of an investor you're going to be, really. I do want to remind you, like, you don't have to get it all perfect. Like, you don't have to sit here and try to predict, again, which asset class is going to do well, or try to predict if you should buy gold, silver, whatever it is. There are funds that give you exposure to a little bit of everything. For example, the S&P 500 literally gives you exposure to all 500s of the biggest US companies. If you're somebody who wants to be even diversified more than that, you could get something like a global fund, like VT. You get exposure to the entire world, not just the US stock market. So there's simple ways you can approach the stock markets. And it's my philosophy that I believe if you're just getting started or if you've only been investing for a year or two, that you should stick with the simple ways and still learn, right? Like take the time, maybe a couple of hours to learn about different asset classes so you understand what's going on. And then you can make a decision for your life based on what you got going on, your own risk tolerance, and it's your money, right? That being said, let's go ahead and shift and kind of talk over our 2026 moves or kind of what we have planned on the back end. I think I'd like to start more for our people who are new here, people who have tuned into this episode and maybe they've only been investing for a few months or maybe even a year, or maybe they haven't even started at all and they're just getting some different perspectives so that they can build their own portfolio. Let's start with this question. I think this is a good one for all of us to kind of reflect on and then share some insights to help those who are in the beginning stages who might be listening to this conversation, about gold and silver and the de-dollarization and be like, what's all this? What's going on? Like, what should I do? If you could send one message back to the version of you of when you first started investing that would potentially change the outcome of where you are today, what would that one message be?
Looking back, like I would tell myself when I started investing, I think I was more interested on impressing others on easy, fast cash. Like, hey, I can make this much money and, I can buy these different assets with this money, right? Or depreciating assets sometimes, right? And I think that was something that I will probably change. I think there was probably some money lost around that time, which we're trying to impress instead of trying to more knowledge or learn more instead of like having to impress others and focusing on that. I think directing my focus on gathering more knowledge around different assets would have been a better approach at that time when I started investing. I think I was more focused on quick money. I think
Mhm.
many of the people probably that are listening today, they are looking for that next lottery ticket or that next, big, that's double or four times my money. And what am I going to do with it? Like, that's the question, right? Like, what are you going to do with it once you four times it? Are you going to go spend it on a new car, or are you going to learn how you did that and try to do it again, or even teach others how to do it? I think that's
Fernando, so how long ago did you start investing?
I started around 19.
Okay.
When I started investing, yeah. I started investing with a company called Fundrise. I don't know if you guys ever heard of them. They're on a real estate investment company, and I was with them before they even created their app or launched. And I'm not doing any promo for them, by the way. But they were focused on real estate ETFs. It was like a real estate ETF. So what they would do is, you would invest your money in return, you'll get 14, 13% per year, but they would invest in developers that were building apartment complexes, and they would buy a lot of townhomes and they would develop it, and whatever came in return they would spread out to their investors in the fund. And I ended up getting lucky enough to be part of buying the shares early in that company in Fundrise, and then I cashed out a good amount at 19, and then walked into crypto. So it's good times.
Well, congratulations on that.
Yeah.
Uh, yeah, and I think it's a powerful lesson to kind of reflect on. So, like, you'd basically tell yourself to, would it be more of like not getting too tied up in like that quick win and then trying to chase the next one? Like, did you find yourself kind of going down a path of just trying to find the next one real quick and then maybe getting burned a little bit?
I think that because the first thing that I did was like I bought a brand new car,
Okay.
you know, and I wanted to get a new car, and I started spending money on like luxury things. And yeah, I'm not against that, right? If you can afford it and you have, you know, enough money to do it and that you like premium stuff, go ahead. But at that time I was 19, and
Yeah.
that was not something that I should have been focused on. And I think I lost some good money that could have been compounded today to how much higher levels, you know? And I think
Gotcha.
like younger people should really be careful with that, because when you're young, you want to show you really got it.
Yeah.
Nobody knows what's in the bank. So how do you show it? You buy stuff that's expensive,
Buy a car.
Yeah, you buy a car, you get a Rolex,
Yeah.
and you go down the street, and that's how people actually see your wealth. And that's not wealth. I think that's not wealth, right? That's just flexing. Simple as that.
Yeah.
Yeah.
No, that's a good point. I could probably go next because I think for I like how Fernando. I'm laughing because Fernando mentioned the car, and I was like, yeah, that was me. Like I was exactly that guy. And the thing is, I didn't buy it for the flex, but nonetheless, a bad decision is a bad decision, right? Like whether
Yeah.
you have good intentions or bad intention, the outcome is the same, which was I was driving a Benz that I could not afford, right? Or it didn't add value to my life a certain way, or didn't help push my financial needle forward. And so it didn't matter. But that's not what my one thing I'll leave my past self with, because Fernando at least covered that part already and him buying a car too. So so that's good. But what I would tell my younger self or somebody who's newer starting off is to just focus on 3 or 4 index funds in terms of your portfolio in the stock market. Do not complicate anything because building wealth is actually not complicated. Okay. If you have to do a million things, jump through a million hoops, you're probably gonna be broke. Because think about it, most successful investors, we've seen the track record. The data says that if you check out, you can check out all the episodes we've had. The data does not lie, right? It's like no matter how you could hate it, you could not like it, it could be boring and not exciting, but guess what? It works. So I would say a 3 to 4 fund approach. And for the record, I owned like 3 to 4 index funds when I first started too. The problem was I owned too many individual stocks in addition to those index funds. So it wasn't necessary because owning all those individual stocks essentially was like me building my own index fund that I'm creating, which wasn't necessary. And then like, especially at a young age, it's hard to load up on so many quantities, right? So it didn't really like add a lot of value. Granted, I enjoy doing the individual research and it helped me learn a lot about the type of companies or the quality of companies I want to have in my portfolio if I'm picking individual stocks. So the lesson there was getting that experience. And that's why I'm like such a monster with this thing now. But it wasn't really necessary at all. I could have easily had 3 to 4 funds and I would have done just as better. And in probably in some cases, even better than what I've performed up to now anyway. So yeah, keep it simple, stupid. 3 funds, four at the most, and just be chilling. Have fun.
I found the same thing. Like the more complicated you try to make your first strategy, the higher the odds that you're going to blow something up or you're going to make a mistake and then regret it later. You don't have to get all fancy in real life, like, buying the fancy cars or in your portfolio, right? Like you can keep things, the funny thing happens is like when the more simple you keep your portfolio and just your life in general, the richer you ironically get. Like there's something there to where, if you're using your money as a tool, spending money to make more money in a simple way, you know, money has a funny way of just finding you that way. So keep that in mind as you're approaching your investing journey. If I could tell the version of me starting investing, I started back in when I was 18. So that was like almost, that was a while ago. And really, I think I was proud of myself for starting at such a young age because I come from a family where money wasn't really talked about at all. And the stock market was thought of as some mysterious thing that if you didn't have insider knowledge, you shouldn't touch it. But I still had the curiosity because like I saw what was going on in there. Like I was always curious about the business environment and I would read, the Wall Street Journal, CNBC. Like I didn't know half the words that they were being said, but I would still just try to like figure out and decipher what's kind of being said in those news outlets and whatnot. But nonetheless, I was still kind of coming in with a, get rich quick mindset in the stock markets and even money in general. Like, although I wanted more money, it's like when I started to make a little bit money, even at my first job, like I still found myself kind of overspending a little bit, right? Like, just kind of how I was, that's the family I brought up in. Like, that was kind of normal, like using debts and, spending money as soon as you get it. Like, that was just kind of the habits I saw around me. So, like, those habits kind of naturally progressed into my life. But I would say if I could sit down and talk to my 18-year-old self, the first thing I would say is, yeah, spend money to make more money and think of money as a tool to get more money. Like that simple mindset of using money as a tool is such a game changer because most people think of money as a voucher. Number two, I would say that the richest people in the world aren't playing the 3 month stock market prediction game. Warren Buffett isn't staring at stock charts all day. These people, the richest people, the most successful people in the stock markets, are playing the long term ownership game. They're stacking assets no matter what the market looks like, no matter if it gets choppy, actually, especially when it gets choppy. They encourage, they want the markets to go down because for them, that means they get to buy more assets at a cheaper price. A good way to think of it is like Monopoly, right? Like in Monopoly, the more houses you own, the better you're going to do in the game. The same applies in these, in life. The third thing I would say is money sitting still is dying money. Idle money is dying money. When I first started to get my saving habits down, it was easy for me to kind of just throw money into the accounts and my bank accounts. But what was hard was transitioning from saving to investing because of the fear, right? Like I worked hard to throw some cash into my bank account and spend less than I was making. And the last thing I wanted to see was my hard-earned cash going into the stock markets, and then it got wiped out. But I will say, luckily there's resources like this podcast, like the Market Hustle on Instagram, to where you can learn the simple strategies that put the odds in your favor. Because funny enough, there's actually a bigger risk to keeping your money in your savings account, and that risk is inflation. And I think a lot of people are a lot more familiar with that nowadays. Like, for example, if you were sitting in cash all of 2025, you missed out on about 16% plus of potential gains that you could have made on that money. The last thing I'd probably say is that I think one hard part of investing was wanting to get in at the right price, right? Because like of course, like when you're staring at the stock markets and you kind of have the insights, like, all right, cool, I'm gonna buy an index funds, like this kind of gives me exposure to all of the best companies. The last hurdle I had to kind of overcome was buying at like all-time highs or near all-time highs. Because most of the time, I think it's like 70% of the time, the market's gonna be near or at all-time highs. And I think as a newer investor, it's like you don't want to buy at the all-time high, right? Like you want to get the best price possible. But what I will say, what I would tell my younger self is that today's high prices or expensive feeling often become tomorrow's cheap prices. For example, 10 years ago, VOO, which is an S&P 500 index fund, was sitting at 190. Many people called it overpriced then. Like there was tons of people calling it overpriced. 5 years ago, right around the COVID time, VOO was sitting at around 343. And of course, if you remember COVID, a lot of people know what kind of happened to the stock market where it was pumping and it went really high. Even at the all-time high or near the all-time high, if you bought, you would still be up significantly today. And of course, during that time when VO was at 343, many people still called it overpriced. Today, VOO is sitting at 628, and many people are still calling it overpriced. And so, like, my thing is like, once you realize that the markets, although it might seem expensive today, if you have that long-term mindset and you're playing this game with years or even decades in mind, the expensive prices today often become the cheap prices in the future. And I think that alone would really help me overcome some of those initial hurdles. Because again, especially if you don't come from money, like it's easy to get caught up in some of the mindset hurdles, I guess, if you will, where you don't want to lose money. Like nobody enters the stock markets, puts money in there wanting to lose money. But what I will say is that there are simple strategies that you can learn to get the odds working in your favor, whether it is index funds or taking the time to understand how compound interest works. You might have heard compound interest, but if you spend a couple of hours kind of reading up on it a little bit, that kind of helps connect the dots in your head. You're like, okay, this is why people talk about long-term investing, is because the longer my money's in the markets, the more it has time to grow and expand and get more money. And then, you have this exponential curve to where you're just rapidly making money like Warren Buffett. Like this guy's Warren Buffett, most of his money came after he was age 60. Like most of his wealth, a big chunk of it came after he was age 60. And so like once you kind of see that compound effect in other investors, like kind of how it's benefited them, you start to understand why this long-term game is so damn important. But yeah, that's kind of what I tell myself. I'm curious what Pierce though. Pierce, what would you tell your early self who was just getting started investing? What tip would they need to kind of get things going in the right direction?
Take the risk. I mean, for me, it was just I don't know. I mean, when I started investing, everyone starts with different amounts, and for me, it was just trying to play it safe like everyone does. But I wish I would have taken more risk, and no, I feel like at first the first couple of years I was definitely over diversified, and so I was playing it safe. I mean, yeah, I was beating inflation and stuff like that. I was making 10% a year because I've been investing for 6 years now. So it's like, okay, the market's been phenomenal for the last 6 years. Yeah, we've had little blips and stuff like that, but overall, it's been insane for everybody. And I wish I would have taken more risk with it. Yeah, I mean, that's the best way I could put it. Just take more risk with it. I mean, I'm young right now. I have the ability and I'm very blessed to say I can absorb the risk, right? If I have a little downfall, I'm okay. Nothing's really going to change. And I wish I would have just hit it a little bit harder and what would it be exponential, like, increase in my portfolio? Probably not. I mean, would it really make a difference? And like Fernando said, what would you do with it? I don't know. It's sit in the account and just keep on growing. So it's just like, it was a learning lesson. And it's definitely helped me over the last, 3 years of, figuring out, okay, like, every single year I restructure my portfolio, little bits, hey, I'm gonna do this differently. I'm gonna do this differently. But originally, I wish I would have just not played it as safe, not been in so many funds. And, at first I was in funds that overlapped. I own a bunch of the same stuff, and I wish I would have kind of, not have diversified as much, and just kind of, just do that.
Own some of the quality companies, kind of let them do their thing.
Yeah, I mean, I owned all the quality companies, but I owned doubles of the quality
Yeah,
companies. I
yeah.
wish I would have been like a little bit in different sectors and stuff like that. Like I didn't hear about emerging markets until I was probably 20 years old. And then, that's when I started really getting into it. And I was into things like China and India. And it was good, but I wish I would have hit that maybe a little bit earlier because at first I was like, okay, well, I'm gonna stay based in the US. But as I grew as my knowledge as an investor, I was like, oh shit, wait, US is kind of everywhere. So
Help us understand kind of how you overcame that early over diversification or hesitant to take risks. Like, what would you say helped you kind of get over that hurdle to get more maybe aggressive and more strategic with how you're building out your portfolio?
okay, well, I mean, I'm gonna say this to all. I mean, I owe it to my dad. I've said this before and I'll say it again. I mean, I really do owe it to my dad. I structured kind of my portfolio on kind of how my dad had his portfolio restructured, had his structured. My dad was retired. I was 18 years old. I have no need to have my portfolio structured how my dad has his portfolio. My dad's in wealth preservation mode. I'm trying to grow my wealth. And so it's like, my dad's like, hey, I need to make this last for the rest of my life for you guys, blah, 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 blah. Cool, cool, cool. I'm gonna do the same thing. Dad's super easy. Let's just structure it like that. Let's just buy some simple stuff. And I think I kind of realized that after year two of seeing like, oh wow, like this is I kind of missed out on these gains, which is okay. I still made money in the markets, and whatnot, but I definitely could have made a lot more. And it was the fact that I realized my dad's always told me this, and I appreciate him for it. This is when you do stupid stuff. Not like overly stupid stuff. You go spend all your money on a car, you go spend all your money on stupid dinners, stuff like that. But you do stupid stuff. You take the risk because I can absorb it, right? I'm thankful I'm living at home. I can absorb it. My bills are minimal. And so I would take the risk. And over the last 2.5 years, 3 years, I have taken that risk and it's shown to be very well. And who says it's going to be well, as I grow older and stuff like that, I start having more bills. I'm gonna have a house, I'm gonna have kids. I'm gonna have all these different things that okay, well, hey, I can start playing it more safe. But as of now, I don't have any of those things. So hell, dude, I'm gonna take the risk. I'm not like I'm saying I'm gonna throw all my money into crypto, throw all my money into gold and silver. Definitely not. But I'm definitely gonna take more risk and that sector. Just
Yeah.
kind of be more ballsy with it.
Something that comes out from what Pierce is saying is like you're taking more targeted risks.
Exactly. That's exactly
Yeah,
it.
yeah. Like you're still like young and like when you think you're telling yourself a younger self, I think telling yourself like take more targeted risk because you can absorb it, like you said. I think people that can't absorb it because they're not that young anymore, and maybe the audience, some people in the audience are like in a different age where maybe they have kids or they have things that they can't really absorb a financial hit for a bad decision or a bad targeted risk. But yeah, I think taking the right risk and more precautious if you're older or if you're younger, take advantage of that.
Yeah, 100%. And I think that's really smart, Pierce, like kind of how it's interesting to see how you've kind of developed as an investor or just like how you're positioning yourself now. Cause like even our first couple of episodes, like when we started the podcast, like you've come quite a long way in how you've built out your portfolio and like how you're
Yeah.
approaching things. It's really cool to see. And to Fernando's point, if you are 40 or 50, if you're in your 40s or your 50s listening to this podcast, like, yeah, you're going to play the game much different than if somebody, is playing the game in their 20s or 30s. If you are in your 20s or 30s, like you should take a little bit more of an aggressive approach because you have time to withstand the ups and downs of the market, or you have time to take some of those aggressive risks. But obviously, you want to be smart about it, right? We're not saying go out there and put everything in, Bitcoin or put everything in silver or whatever. It's be smart about it. Like, build a core of your portfolio. Like I like to say, follow something like the 80-20 rule, where like 80% of your portfolio is in the boring core stuff. Maybe that's your S&P 500 funds. Maybe that's your global fund, like if you want a global exposure. And then maybe 20%, you can have it in more of the growth aspect, like if you're young, right? Maybe you have some individual stocks. Maybe you have some emerging market exposure. Maybe you put some gold and silver in that 20% bucket. Like more of that, that 20% bucket of like, it could either be like more defensive, or if you're somebody who wants to be more aggressive, that could be for the aggressive part. So like there's different ways you can kind of approach building out a portfolio. But at the end of the day, I think we're highlighting it well that everybody's going to be different on how they position. And I think it's important not to get married to a one strategy and think that's the only way to invest, right? Because there's many ways to invest. And throughout your financial journey, odds are you're going to change things, in the future, like as you learn more, as life changes. Like maybe you have kids, maybe you get a new job where you're making a lot more money. It's like you're going to invest a lot differently than if you're making half the amount of money you're making now, right? And so life changes, circumstances change, risk tolerances change. And I think it's good to take a day out of every year to maybe just sit down with your portfolio and just think through like, is my portfolio currently reflecting me as an investor with my current life, with what I have going on? If not, give yourself permission to change things, right? Like that's the whole concept around rebalancing. At the same time, don't get caught up into like thinking you have to stick with one strategy forever. We're human. The more you grow, the more you learn, the more you're going to have better insights to make moves that are more aligned with how you want to approach investing in general.
I think Fernando touched on something really important. I think the risk piece, the younger you are, the more threshold you have to take risks, make mistakes, reset, revamp, right, pivot. You can do a lot of that when you're young because number one, when you're typically 15 to 20, 21, 23 years old, you probably haven't touched a lot of money yet, right? Or you haven't generated or created a lot of money in the marketplace through your job, X, Y, and Z. So whatever mistakes you're gonna make, even if it's whether it's with trading, whether it's in investing, you pick the wrong stocks, you pick the wrong asset class, you try something, whatever, it's a lot easier to manage those losses, right? Because you're also not only have you not generated like a mountain of cash or money, you also don't have certain binding or life responsibilities that keep you anchored or limited, right? Because so you don't have a lot of money, but you also don't have, ideally, probably you probably don't have kids yet. You don't have you don't have a mortgage yet. You're not responsible for aging parents, right? Hopefully, if you're in those situations, that's different ballgame. But if you're not and have this luxury and flexibility, those that age is incredible opportunity to fail fast, fail forward, and then you can move on and make decisions differently. As you get older, it gets a lot more serious. It gets a lot tighter. Even if you're making more money, you can't take as much risk. Even if you're at a age of 30, 34, you might not be able to really, kind of take on certain risks that you could when you're younger because now that money is not just money anymore. It's really your lifeblood. Okay? It becomes a whole different importance on that resource to make sure that you're not mismanaging it. And in being in that state, it's easy to see why people have fear, right? Of even trying to invest their money or trying to look at different things or being curious about certain things because of that stage. When you're younger, it's a lot easier, Like when I was young, I've been, like I said, I was young, dumb, and stupid a little bit too, right? Like it's okay to do young, dumb, stupid stuff. Just don't do the young stuff, stupid, dumb, stupid stuff that you can never recover from, right? Like I bought a Benz at the age of 18 or so when I graduated from college, and it was like 30K or something like that. But guess what? I was able to recover quicker. Imagine doing that now, right? Let's say you're 30, 31, 35. Doing that now, oh yeah, it's gonna take you like 30 years to just recover from that little crap. You know what I mean? So I do agree with what Pierce saying is when you're young, definitely learn how to take calculated risk or risk that you can manage, right? Or bounce from. And in taking risks, it doesn't mean be greedy. Sometimes a lot of people get that twisted. You know what I mean? They just, oh, you take risks, go big or go home. Yeah, you're gonna be going home if you're not careful with what you're trying to go big on. You know what I mean? So, and it's complicated because everybody live in a world now where everything you see is everybody's life looks perfect. It looks perfect. Everybody's independent. Everybody has money. Everybody is living like that perfect life. But you got to keep in mind, man, 90% of what you see online ain't real. There are people that have millions of followers and they're influencers and their life look a certain way. I can promise you, most of them don't even make a penny from their platform. They're still working a regular 9 to 5, like many of us are. And so you might think, oh yeah, their life looks this way, and so you have to just kind of duplicate whatever they're doing, and they would just tell you take this risk or do this, and no, you have to know how to sift through the mess. And this because there's a lot of mess out there, man. I mean, people are liars, man. I know I'm going on a little bit of a tangent here, but there are a lot of fucking liars. Excuse my French. People are not. You'll be surprised how many people are faking everything.
Yeah.
So do not get lost in that sauce thinking, oh yeah, somebody's gonna start off 2026 and you're gonna see them post, oh, they just oh yeah, they just bought a house out the gate or something like that. And you're sitting there thinking, damn, I'm in my shitty ass one bedroom apartment, my little studio. When am I ever gonna get there? The market is crazy, housing prices, rate, this and that, Trump, this and that, right? Like whatever you want to call it. Putting your energy in that area is not gonna help you get a house any faster. It's just not. If anything, it makes it nearly impossible to actually get over the hurdle that you've kind of self-sabotagingly placed because of what you're seeing or witnessing online. So for anybody that really has a tough time with those things, hey, I would say delete the apps if it's not at helping you at all. That's my thing. Of course, you can learn a lot from the apps, right? You have all our platforms, you have the podcast, you have YouTube. There's a lot of things you can learn. But if the social media apps are really making you like second guess your life in a really dangerous way and kind of, put certain it makes you feel like you're not worth something or you're not winning simply because you're not at a certain spot by a certain age or you don't have a certain amount of money because you see people posting their portfolios or whatever they have. If it's that type of situation, I'll say get off the apps. Go on YouTube, search up whatever you want to learn. You got our podcast, right? You can learn whatever you need. If that's the case, then I'll say get off the apps, especially for the younger people because it's doing a different type of damage to them than it is for us. We grew up with MySpace. We're like the original
MySpace.
prototypes, right? We know how to like we've been around this block a million times, so it's a little bit different for us. But for people that really grew up in the world of just social media only at a very young age, were given that tool and the damage that it's doing to some of these boys, some of these, young girls, and how they feel like they have to compete or keep up with the Joneses, keep up with the rest of the world, and do all these things. I mean, it's not just about a money thing, and that's the beautiful thing about this podcast. We don't just talk about money because you can have all the money, but if you lose your soul, I mean, damn, you lost everything. Like that's not worth it. So yeah, enough of my little TED talk.
No, it's
Something
good.
something that I think about when Baafi's like talking right now, I think there's a difference between being great and being the greatest. I think there's a lot of like superstars and LeBron James, Tiger Woods, and what really separates and being around people like that is their discipline. Discipline is everything. I think being able to stay constant and it relates so much to compounding, where if you keep doing the same thing every single day and you do exactly the same, you're gonna slowly grow quicker than somebody that's trying to do it just, get the shortcuts. And that's the biggest difference between, people that really want to get there, but they don't have the discipline. I'll tell that to my younger self, like
Mhm.
you're undisciplined. That's what I should tell my younger self if I can go back. I wasn't early, I was undisciplined.
Yeah, no, well said, man. And I think to Baffi's point, my thing is like we got to use social media more intentional, especially in 2026. So like, if you find yourself getting down that comparison rabbit hole, which the algorithm's literally designed to keep you hooked, and one of the easiest ways it could do that is by showing you stuff that, makes that comparison mindset kind of come out and keeps you scrolling and kind of keeps you sitting there guessing and whatnot. Like, what should I, what am I doing wrong? Whatever it is. If you find yourself going down that direction, you can hide pages. You can block pages, right? Like, it's like be more intentional with how you're curating your own algorithm because the algorithms are just designed to show you more of what you engage with. And one way that it shows that you're engaged is when you stop at a picture and stare at it. It's like the longer you sit there, the algorithm's clocking that. And so if you find yourself getting trapped in some algorithm spiral or some doom spiral or whatever it is, be more intentional. Hide posts. Like you can tell the algorithms that you don't want to see more of these type of posts. Block people. That way you'll see more of the content you want to see because there is a lot of good content out there. Like there is positive content. Like you can find the right content if you build your own algorithm. But if you let the algorithm tell you what you want to see, and you go down a bad path or a bad spiral, whatever it is, it's just going to show you more. Especially if you get angry at posts and you start commenting back, then when you comment, it's going to show you more of that. So like we just got to be more intentional with how we're using social media. And if you're not going to use it, to Baffi's point, I mean, YouTube's a great resource to kind of be a little bit more curated with how you're going to approach what you're going to consume. And then, of course, books. Books are a great way to keep things purely educational. It gets out of that dopamine spiral that sometimes the algorithm likes to push at you. Yeah, I think the more you can get intentional with curating your own feed, the better, because I personally think social media is a powerful tool if you're using it the right way, not only to learn, but also to network and meet the right people. I mean, at least for me, like the Market Hustle is a massive platform, and it's literally been what's built this podcast and connected me with this community, and also with some incredible opportunities like interviewing the CEO of Robinhood. And so, like, if you use social media the right way, you can get a lot out of it. But also, you can also go down some bad rabbit holes if you're letting the algorithm just show you whatever that piques your engagement or your interest or whatever it is. But nonetheless, we've gone over quite a bit in this episode, and I'm really looking forward to 2026. I want to hear about your guys' goals. Like, what are some of your guys' big 2026 objectives, and how do you guys plan to maybe do that? Like, I'd love to hear some of like
Mm.
what you guys are brainstorming, how you're approaching this new year.
Oh, nice, nice. I think I got four main buckets really, and what I do with my goals, I like to make it a little bit fun. Right? I give it like code names, right? Almost I'm on a mission, like Mission Impossible kind of feel to it. So, the first one is really it's not like I guess an exciting code name. This is really just cash is king, right? And the reason why I say that is because I have a savings goal for Q1 2026, which is to hopefully save 10K by the end of March. And part of the reason why is because in 2026, I don't care who you are, what you got. This is not the year you want to be asset rich and cash poor, right? I don't recommend putting all your eggs in the stock market or real estate or a combination of both and having no cash. You will regret it. Like it's not a matter of if, it's just a matter, it's not a matter of if or when. It will happen where you're gonna need cash. Everybody needs cash, no matter what's happening, right? So part of the reason why I want to beef up our savings a little bit is to one, because we just moved recently, right? There's been a lot of moving parts, and so when you living in a house or have some of those type of situation moments in your life, you're gonna need to have a healthy cash position, not just for emergencies, but sometimes there are things that you're excited about that you want to do or enhance or get, right? Decor, whatever you want to have you. And it costs money. So, and some people will just kind of go, just run it up on Amazon on their credit card. Next thing you know, they've got a $5,000 couch and they're going to spend the whole year trying to pay it off when they could have potentially saved up towards that goal and not have to deal with the backlash of that, right? Also, we want to beef up our 2026 cash position in general because we want to have fun, man. We want to go on vacations and do stuff, bro. Like, who said it all has to be stress and emergencies, right? So that's the first one. Cash is king. Save 10K by end of Q1. The second one is Operation Noah's Ark. Okay. And what this essentially means, the fact is because um, the goal is to actually flood the market and collect as many assets as possible, right? You know, how, like Noah was like, if you guys are familiar with the story of Noah, he was, well, the flood piece, all right, the flood in that story is more a negative flood, right? It's not like a fun flood, but in this one is a good flood. And then like
All
collecting the
cash.
assets, right? Exactly. Collecting the assets is like, when the animals and everybody was being saved on the boat, right? So we just kind of collecting the assets. And the reason why is because to after Q1, our focus is to kind of shift and beef up our investing, contribute as much as we can to the stock portfolios, right? Because in the past, especially in 2025 and a little bit earlier, we had to worry about mortgage plus rent. Now we pretty much have to focus more on just the mortgage and not rent no more. So we're just rerouting all of those resources back into our investment portfolio, as much of it as we can. I don't have like a specific amount on what how much I'm going to be contributing, but as much as possible every month. The good news is that whatever the amount is better than what we was contributing, like on average, right, on a monthly basis in 2025. So sometimes people get too married to like a specific number with their goals, and depending on the situation, the most important thing might be just the fact that you're doing better than the previous year or than before. That's all the win you need, right? If the numbers can get better, great. If it doesn't, you're heading in the right direction, and that matters. Okay, I got two more. The third one is Operation Enjoyment. You guys know what that's all about, man. It's all about having fun, especially with my wife, enjoying more dates, activities, just exploring the new area, the environment, especially as the summer and the spring come around. And of course, we're still grinding hard, being responsible, but sprinkling in a little bit more soft life and quality experiences when we can. And then the last one is really a black box. And this is something I've actually I call it black box now, but it's something I've shared with Josh, Pierce, and Fernando in our group chat, which is a huge goal that we're working on this year specifically. I'm not going to share it with the audience yet. I want to actually hit it first, and then it would
Ooh.
be nice to kind of break the news to everybody, you know. But it's really a goal that honestly very few people ever accomplish and achieve in their lifetime or even through generations. So it's something that I'm holding a lot closer to my chest. And once we cross that bridge, we'll pop champagne on here one of these episodes and we'll celebrate. But yeah, that's my four goals really for the year. Cash is king. Second is Operation Noah's Ark, meaning flood the market. Um, Third is Operation Enjoyment, just enjoy like having a pretty healthy balance and enjoying life. And then last is the black box, which is, will be a surprise. So keep tuning in on these podcast episodes, man, because you never know which one is gonna hit.
Gotta listen to everyone. You never know when he's going to drop the black box. Good stuff, man. Baafi, I'm curious. So, well, first off, congratulations on the big 2025 wins and moving into the new house. Would you say that the mortgage and like having that responsibility has contributed to beefing up the cash pile? Like, was that kind of into your calculus or like thinking through that?
Yeah, so well, because what was happening was so responsibility wise, we were basically paying a mortgage, but we were previously renting, right, in our apartment. So we were paying mortgage and then also paying for rent, right? Now that
Okay.
we've moved to the house, we don't have to worry about the rent no more. In fact, I actually called them today. I was like, hey, I just want to make sure, you guys got the keys, everything is good. I don't owe nothing, you know.
Right, right.
But yeah, that's kind of the goal there. Yep. So rerouting as much of that cash as possible to the investment portfolios, and also allowing us to really enjoy the hard work and life we've built over the last 10 to 12 years. Yeah.
I love it. I love it. And I think it's important to call it because, like, especially like as a new investor, like when you start throwing money in the market and you start building up your portfolio, sometimes you think like, oh, do I really need an emergency fund? Do I really need to like, have some cash in a high yield savings account, like whatever it is? And to Bafi's point, it's like you never know what life's going to throw your way. And at the same time, like you can also build up an opportunity fund, like Bafi's doing, like where he's going to go on some trips, so he's going to stash away a little bit of extra cash so he can enjoy life more fully. And when all your money's tied up in the market, like although we want to put as much in the market, if everything's in the markets and then something happens, if you have a flat tire, if your car's engine goes out or whatever it is, the last thing you want to do is have to go into debt to pay for that, or have to sell your assets. If the market crashes and it's at a loss, like you don't want to sell your assets at a loss. I was like, that's the whole purpose of having a little bit of cash on the sidelines. Is just you never know what's going to come your way, whether it's life's uncertainties or even an opportunity that comes your way.
Yeah, but I would also the only thing I would add is like one, these goals are great, and the reason why we've been able to set these goals and pursue them and work on them at this stage is because of the work we've done over the last 10 to 12 years, right? Is because of being patient, having that long-term mindset, not getting too fixated on certain things and trying to have it all done overnight. And so the patience piece is so critical, right? Like we've been patient, we've been learning, we've been educating ourselves, we've been investing for the long term. We've delayed gratification, and so now it's like we're at a stage and an age where where the economy is not easy, cost of living is not easy, everything is expensive, but we're in a very privileged and blessed position to save a decent amount quickly, you know, um, fund our portfolios even stronger than before, still have fun and not even stress, right, about certain things. There's a difference between working and making good money, but you're stressed 24/7. You have
Mhm.
nothing invested at all. All you have is a bunch of debt, right? And then you got to deal with your asshole boss who's probably mean or something. I don't know, who don't value the work you put in. Um, so being in this position now is really like a reflection of everything that's happened over the last 10 to 12 years that has allowed us to be in this position and to set the goals that we've set and be able to not stress about things that for some in many cases will break people's livelihood, right?
Yeah.
People have lost assets, people have lost houses, right? People have lost jobs. Like there's so many heavy hitters and things that people lose as a result of whether it's sometimes their own doing, or maybe not their own doing, right? It's just the economy, anything can happen. They lost a job, the company went out of business, whatever,
Right.
right? So just be patient with yourself, especially if you're new and starting out. Be patient, play the long game. It's gonna work in your favor, and eventually, you get to the point where you probably, at some point, you'll blow every penny you make and still retire. It's doable.
Yeah, and that's what it's all about, right? Getting yourself in a position to where money isn't as much of a stress, or in a position to where you can take some make some different moves, whether it's a risk that you want to take, if you want to start a business or invest more aggressively. It's easier to do that when your foundation's in place. Get a house, like buy a house, start a family, like all these life events require that financial, or the financial stability makes all these events a lot easier to kind of maneuver and go through. And that's what this game's all about, right? We're not out after just chasing money for money's sake. We're getting money so that we can have a better quality of life, right? And yeah, that doesn't mean it's going to happen overnight. It doesn't mean if you're starting from zero right now, you're going to have everything figured out next month. Like, this game takes time. And to Baafi's point, like, he's in a good position. Like, if this is your first time listening to Baafi, you're like, damn, this guy has it all taken care of. Like, he's got all his boxes checked. He's going enjoying life, and he's also moving into this nice house. It's like, well, how did you do this? And what you don't see, like, you see the results of all the work he's put in for years, but you don't see the early stages of his journey where
Yeah,
he made the sacrifices to
yeah.
get where he's at today in the career he's working in,
Mm-hmm.
and with the black box Operation Black Box that we might hear about in future
Yeah, yeah.
episodes. Like,
That's a
all
that's
this
a
didn't
big
happen
one,
on
man.
accident.
Yeah, that's a big one. And again, like Josh, I think you make a really good point, man. It's like people always see the results, whether it's the tangible results or the intangible results in a different manner, but they don't realize what it takes to get there. Like, I mean, there are times where, dude, I was eating PB&J, bro. Like
Yeah.
that, and ramen noodles, man. And the ramen noodles is terrible for you, for your life. I mean, I wasn't even eating like the good kind, I wasn't even getting like the good actual ramen, I was getting just like the BS ramen, like PB&J. That was my dude. Like every 2 weeks, my spending budget, it was the craziest thing. $50, bro. 50 for every 2 weeks. Try dating with $50 every 2 weeks. That's your spending budget. You know what I mean? Like, I got rid of that car that I was speaking about earlier in the episode, and I bought a bicycle. I bought a bicycle, and then I was working two jobs, day and night, sometimes day and overnight.
Mm.
Those are the things that nobody see. Like, I wasn't traveling all the time. I wasn't at parties. You won't catch me in the club, in the section in the club. You won't catch me, on Miami Beach on spring break, right? You won't catch me going out every weekend at the bars. These are the things that nobody ever see, and it's so important that that side of the game is also shared, because if everything looks pretty up front, but nobody knows like just the maintenance, the difficulty, the challenges, the long nights, the sleepless nights. Dude, I was sleeping like 2, 3 hours every day because I was working day and I was working overnight. Two full-time jobs, man. I'm not saying it's healthy. I'm not saying that's what you should go do. But you need to figure out what you're about, what you want, and how you're going to get there. And unfortunately, it's not always going to be glamour and pretty. But I can promise you, when you do get there, boy, is it sweet. You know what I mean? Like, it's glamour and pretty when you get there, and it makes it all worth it.
And that last part's the important part is, a lot can change in a year, and it might not be sexy, it might not be glamorous, but it's almost always worth it. My story is pretty similar. I started working at Wendy's. It's like, I don't come from a family that makes money, and I had to, right when I turned 16, if I wanted to buy clothes or have anything, other than what was, at our house food wise, it's like I had to start working ASAP. And it's tough. Like, those first few years, if you don't come from money, is really difficult. And it's easy to kind of just cave in to the kind of the victim route of like, oh, it's not possible for me to pave a new path. It's not possible for me to improve my current situation, and just think that you're going to end up like maybe everybody around you. Maybe you come from a family where they make bad financial decisions, and money's just a constant struggle. The good news is that doesn't have to be your forever reality, and you're only ever 12 to 24 months away from a completely different life. Especially with social media. Like, I mean, social media, there's lots of ways to learn if you're following the right people. The internet in general, right? Like, we have AI now where you can chat with AI and help you brainstorm like different career paths. Like if you're in a job where you hate, you could literally pull up AI, give it your resume, and just ask it to help you brainstorm different career paths for yourself, right? It's like we have all the tools at our fingertips. And the truth is, it's never been easier to change the path of your life where it currently is, whether you are in a position where everybody around you struggles with money and maybe you kind of feel money is tight and scarce, or maybe you're in a position to where things are good, like you make good money, but it just seems to find a way to disappear. You can't really keep your hands onto it. That's also a lot. That's really common as well with high income earners, where these people, they're really good at, they're experts at making money, but managing and growing it is where the struggle kind of comes into play. And that's because there's different skills in the money space, in the financial space, right? Making money is one skill. Keeping the money you make is another skill, and then growing the money you keep is a third skill. Like these are all different layers of the financial literacy skill set, if you will, and you have to learn each one, and each one takes time. And so that's why this journey is not going to happen. You're not going to be a millionaire next week, next month. It's going to take time to build that skill set. Whether it is figuring out how to make more money, building out a career path for yourself, whether it is building a budget for yourself, like figuring out what type of money management system works for your life, or whether it is figuring out how to approach the stock market. Like let's say you got the money making money part down, you got the budgeting part down, you got some money in the savings, but you haven't quite figured out how to invest it. Like these are each different layers, different stages, and they each require a different way of thinking or even different resources to conquer that level, if you will. So be patient with yourself. I think Baafi, just everything he shared is a great example of that the change is possible, right? Like you can make the change, you can make the shift, and the one thing that you just need to do is stay consistent with it, right? Like I know it's cliche advice, but the reason why it's cliche is because it's true. If it wasn't true, it wouldn't be cliche. And of course, you got people who are promising, quick shortcuts, quick wins, especially on social media. Like if you go to again, if you're on the wrong side of the algorithm, if you start going down the promises of get rich quick schemes, it's very easy to end up in a bad spiral or maybe even blowing yourself up to where you end up in a worse position because you're trying to find that magical shortcut that ironically makes this whole journey much more longer, right? Like I literally talked to somebody a couple days ago where he spent the last 3 years going down trying to figure out a quick way to make $1 million so he can get financial freedom. He went down the options route, he was trading, but he just wasn't doing it the right way. He was trying to find that magical shortcuts, and unfortunately he lost lots of money. And he found the market hustle luckily, and now he's on a path to where he's building that financial foundation. He's spending less than he's making, and he's actually putting in the work now to get the compound interest working in his favor. And so, like, if you find yourself down that path where maybe you did make the wrong turn, or you made a yeah, you just kind of went down a path that maybe you regret. Like it's normal, like it happens, right? We're all human, especially if you've never taken the time. Like if you don't come from a family that talks about money regularly or even invests regularly, like you have to figure this out on your own, right? You're not coming in with a blueprint. You're coming in kind of blindfolded, and it makes the game harder. But to Baafi's point, it makes it more rewarding once you get on the other side and you build something meaningful. You build something sustainable. You build wealth that gives you the options to live life more fully. It's like getting on the other side of that line is I'm literally getting chills kind of thinking about it because like I've gone through that same journey myself. And everybody listening to this, like keep doing what you're doing. Like 2026, it's a new year. We got 12 months, and a lot can change in 12 months. Just keep that in mind. Let's jump over to Fernando and Pierce. Let's see what their kind of goals are. I'd love to kind of keep that momentum going.
Yeah,
Fernando, why don't
so
you go next?
honestly, I think this year some of my goals when it comes to trading would be trade less and decide better. In
I thought you were going to
2025,
say index funds, Fernando. I thought you were just going
yeah.
to start stacking these index.
I think that decide better when to exit, when to profit, when to, equality management. Just like I think I have good discipline, and I think it's a discipline everybody should take with them is risk management, right? But you also have some liquidity management when it comes to active trading. You have to be careful, with certain parts of the biz like margins or collaterals that you're playing with. And this is more of the active trader side where you're playing with, sometimes not your own money. And you have to be really careful how you're managing that liquidity. So just deciding a little better and then also having more operational discipline. I think building not on motivation, but more on discipline and also just having system in place is a very important things that you can do that I can do right for this year. And the reason why I say you can do because I'm sharing it with everybody to be able to take it with themselves, right? Having a system in place is such a good thing to have instead of just working on reaction or motivation, which can really affect transitions over to mental health. Sometimes, working with a lot of money or different figures, you can be affected mentally very quick, and then you're acting on emotion, and you lose everything you worked so hard for in your foundation when it comes to discipline and everything you built. So you have to be really careful because, when you lose that mental health, that's when things start going sideways, and you could end up telling your story at some point where you lost it all. And you don't want to be that, right? You can prevent that. And I think many people might know they know it all. Many people might think that the only way to learn it is doing it, going to the trades or going through the burn of cash or going through the good times and the bad times. But another thing you can do is just be smarter and listen to people that know what they're doing and actually learn from them. Be a student and stop trying to be a teacher that you have not been certified to be yet. I think that is important to know. A lot of goals this year for me, and I think the biggest one is deciding better, just stacking on what I can do in my discipline.
I'm a big fan of systems, building out something to stick to because that's literally the game, right? Like when you have a playbook, especially long-term investors, like you want to stick to something that you can be consistent with. Because the minute that you have to rely on your own emotions to make moves, or if you only make moves when you feel like it, eventually there's going to be a day or even a month where you don't feel like it, right? Where you're just kind of like, I'll worry about that next month or I'll restart next year. Like the whole point to like building some sort of system that you can stick to is so that it automatically keeps you consistent with whatever strategy you decide to build. Whether that is, Fernando's more active than Baafi, Pierce, and myself, but especially even in long-term investing, like you want to have some sort of system built out to automatically, ideally, invest every time you get a paycheck in. Because like what I've noticed, like the longer you got money sitting in your checking accounts, just kind of sitting there, the higher the odds it's going to disappear to spending. Right? It's like the faster you can get your money moving and not just sitting idle, the faster it's going to be able to grow for you. And that's what a system does. Is it ideally automates everything, whether it's your savings goals or your investing goals, to where it takes yourself out of the equation, takes your emotions out of the equation, and you're automatically consistent and disciplined with it without even trying. It's one of the best ways to build wealth. It's literally on autopilot. If you can build out your investing system to where it's constantly buying you assets every time you get paid, it can't get much easier than that. Like you literally can't lose because the consistency is already baked in. Like you can go out and travel and enjoy your life. Like once you figure out how much money you can spend, it's like your money's going to be automatically investing, and then you have that money that you've allocated towards spending. You can just go out and enjoy life, right? Go on your trips, go build those memories with your family and your loved ones, and the assets are going to take care of themselves if it's all automated. So good stuff, Fernando. I appreciate you sharing that. I'm looking forward to seeing how things progress in 2026 for you. I think down the board, like whether you're active investor or you're a long-term investor, it's like discipline and consistency, and having some sort of system to stick to is the common denominator right there that you want to stick with. So
Yeah, and sometimes it's better, like sometimes doing nothing is better than doing something. I think we learned that very quickly as active traders. Like sometimes if you sit on your hands and wait a little longer, think it out, and then make a trade, it's better than going in with FOMO or other parts of, your emotions and certain things that can push you to make the wrong trade. Because I mean, the foundational part of everything, just add a little more to just a tiny bit. The foundational part of all this, like we think about it as in like it's a set thing. We close it in the closet and it's done. Like we build our foundational wealth and then that's there. You have to remember that if you're active trading and also have foundational two sides of the systems, I guess, you can't leave this side of your own system alone. You have to keep providing to your foundational side. Like you have to keep making changes to your foundational performance and system. If not, this one's going to start kind of not working at the performance or the speed of the market itself. So you have to be just really careful to always look at your foundational side, which is like your high yields, your ETFs, your more conservative investments, making sure that you're looking into that too, because you can get lost in the sauce sometimes.
Yeah. And that's good to highlight because somebody listening in, if they're like a new investor and maybe they wanted to be a trader, maybe they're listening now and be like, all right, maybe I should stick with more of the long-term stuff for now
Mhm.
and build that foundation because it's not easy. I think trading is kind of glamorized as like this quick way to just make fast money and then everything's going to be taken care of. You're never gonna have to work again. You can just be a trader. It's like if only it was that simple, right? You got to go through the work, whether it's being more active in the markets, and the odds are against you, right? Let's be honest. 90% of people who are active investors or traders end up underperforming or losing money in their first year, and so it's something to remember. Maybe you're listening to this podcast and you want to go down that route. Cool. There's a process to do that, but I think nonetheless building that foundation, that early foundation, especially if you're a beginner investor, is so damn important. Because when you have your ETF portfolio, like more of the passive portfolio built out, when you have some cash stacked away in your emergency funds, kind of like Baafi, he's going to pat his up a little bit this first quarter. And when you have like that high yield savings account, when you have all of that in place, it's easier to maybe take a small part of your portfolio and try out some different strategies, whether that is trading or active investing, stock picking, or maybe you want to start a business, right? Like these are all equally high risk positions, right? Like starting your business, like that's another fast way to potentially, not fast way, but it's another high risk play that you can make. Like most entrepreneurs end up failing, like most businesses fail, just like traders. But nonetheless, like when you have a strong foundation, it's easier to take that risk and try if you want to. The good news is you don't have to try if you don't want to. Like you can continue down the more of the passive route. And again, I think what it really highlights and what I hope this podcast continue to highlights is that there's no one right way. There's only the way that works for you as a person and kind of what you want to get out of investing. So thank you for sharing that, Fernando. Let's jump over to Pierce real quick to share his 2026 goals. I know we're kind of running up on time, and then I'll share mine and we'll kind of wrap everything up.
This year's pretty simple, man. I mean, it's just kind of a revamp of last year. I mean, this year's net worth goals. So, I have some different net worth goals in mind, whether I hit this one or this one. I'm shooting for, the one way high up, and if I hit the one right below it, I'm, it's still happy. Physical goals, I've been, just keep on working out, stay disciplined, like everything. It's just discipline in life. Stay disciplined with eating and then just enjoying myself. My friends and I and my girlfriend and I we're planning a European trip again this year. It's trying to make this a yearly thing. We hit different countries every year. I love the south of France for everyone who doesn't know that. So we're going back to Saint-Tropez this year, and we're just going to go enjoy a couple weeks. We're renting this huge, massive villa with everybody. So I don't know, my whole motto this year is just enjoy it. We've all worked our asses off, whether you have a little bit of money, you have a lot of bit of money. Enjoy yourself, whether it's don't put yourself in debt, don't do any stupid things, but if you can do what you want to do it. Because there's going to be a time where you can't do it. Like right now, like I said, I can absorb more risk. So I'm going to eventually have kids someday. I can't go to the south of France, do what I want to do. That's why I'm doing it now. And I'm going balls to the wall. And I'm going to go do some stupid stuff within, boundaries. But I'm gonna be stupid this year.
Awesome, man. Well, yeah, make sure it's legal and you're good.
Oh, it's
We
all
don't want
legal.
you, we don't want you to get deported or kicked out of
We're good.
France.
We're good. We're good.
We gotta go bail him out.
Yeah, hell yeah.
Yeah. No, good stuff, man. Well, hey,
We'll go find you, Pierce. We'll find you.
Dude, I'll send you the villa.
no, good stuff. No, it's always nice to take some time to think through, our goals. I say for me specifically, my big focus is really just building. I think 2026 for me is going to be more of a focus year of building up the market hustle and just kind of expanding on what was built this previous year. The brands, we hit 1 million followers on Instagram, which is pretty incredible. The podcast had some huge wins. We had some incredible guests on here. We had the founder of Robinhood. We had the founder of Solid Core, Anne. So we had some really cool guests, and I really just want to build on top of that. Basically, go even further in 2026. Let the compounding kind of take place with the podcast. Continue to bring on great guests and really just build it all out. I also started my first software project, which has been hard as hell. Like, I've been this has kind of been testing me a little bit as a business owner, like an entrepreneur, is like building out this software piece is there's been nights where I've thought maybe I'm biting off more than I can chew. But we're starting to see some of the momentum kind of come on that side, and it's still kind of in beta mode. But my goal for 2026 is to really hit that hard. I have some help with my software engineer friends on that end now. I'm hoping to get 1,000 1,000 users into Stack Ledger, which is my financial tracking net worth. Tracks your investing portfolio, and it's built for investors specifically. You can connect all of your investments, and it's literally using AI to kind of analyze everything that you have in your financial life all in one place. And so it's still kind of in the works, but my goal is to really hit that hard in 2026. And of course, continuing to put out content on the podcast, on Instagram, continuing to build out Money Mastery, which recently hit 3,000 students. We're going to add some more group coaching to that in 2026. And it's just, it's been incredible to see all the wins in that community in 2025. So it's going to be a challenging year. I'll definitely be more of in build mode. It's going to be a heads down year for me. I'm still going to try to actually fit in a trip in the summer. And similar to Pierce, I actually want to go to Europe for the first time. I went to Japan in 2025 twice. So I'd like to try to check out some countries. I actually want to go to France. I'd like to visit Paris. I got to go out, got to go to like kind of the popular parts first. So I'll probably go to France, Paris, Netherlands, and maybe Germany as well. Try to fit that in. So that's still kind of in the planning side of things. But yeah, I'd say overall, it's going to be a focused year for me. It's a build year.
Nice. No, that's fire, man. Sounds like you're taking the business and the value and the quality of values and products you're giving out to people to really help them on their own financial journey without all the disjoint. It's like I gotta go to this app, I gotta go to my bank app over here, I gotta check it. Right, you're putting everything, you're centralizing it, leveraging AI to kind of help make it easier too, especially now these days, right? We all love Chat GPT. We can prompt stuff, we can ask it questions, it can analyze stuff for us. So, I love it. I love it. I think it's a really smart, forward thinking approach to it. I'm sure it has its challenges, like you mentioned. And I'm glad that you're also making sure you're taking some time to really explore the world a little bit more in places you haven't been to yet and kind of take that in. I think it's well deserved. And I think I can relate a little bit in terms of like, the amount of time and the work you've put in over the years, the decade and plus, and to kind of be on the other side where, yeah, you're still grinding, you're still,
Mhm.
right, putting in work, but you can pause when you feel like pausing. You can take breaks. You can enjoy different experiences along with the grind, and I think that is a beautiful thing. So hopefully more people can experience that going forward. So good stuff, man.
100%, man. And I think that's really the philosophy of the market hustle is, yeah, maybe you have to take a couple of years to put your head down and get yourself to that position to where you can build and still enjoy life. But once you get to that point, what's the point of grinding for grinding's sake if you're not going to actually enjoy it a little bit, right? Like that's what it's about. You can stack assets, you can build a business, you can increase your skills in your career or just advance in your career and enjoy life. It doesn't have to be one or the other. You could do both. And I think we're all a testament to that in some way or another. And we'll continue to put out these podcasts in 2026. I can't wait. It's going to be a great year. So you guys are going to see kind of how we unfold with our missions, and that's what's really cool about these podcasts. We've been doing them for what? A little over, I think, 2 years now. It's like I was actually listening to one of our earlier podcasts a couple weeks ago. It's really interesting to kind of hear how we've all kind of developed and evolved in our own lives. And I cannot wait to see where we all are at the end of 2026, as well as just 5 years from now. Like imagine like where we're at now, like not only the co-host, not only me and the co-host, but everybody listening in, right? Like I talk to the community, like I love when like people who are listening DM me and kind of share what they're learning, sharing what they're kind of taking away from these episodes, because it's encouraging as hell to keep making these for all of us. Like I share any DMs I get, I always share with the co-host so that they can see what people are saying because it's encouraging for us to see the progress you are all making, right? Because like that's what this is about. Like the more we can build this community to where we're all growing, it's like the more we're all going to be able to benefit into the future. And I think that's what's going to lead us to our in-person meetups that we want to do. We're going to try to do a couple of those in 2026 is because we're actually going to talk to more of you, right? Like right now we've been operating mostly digitally. So it's going to be cool to actually meet people in person, shake some hands, have some talks and just learn from different experiences, right? Because like everybody, I think the one big thing from the Market Hustle podcast, what I hope people take away is that there's many different paths to build wealth. There's a lot of similarities, like the core skills to build wealth are pretty similar, right? Discipline, consistency. It's like we all know what needs to happen to make our wealth increase. But nonetheless, like there's still so many different paths that you can do to build this wealth. But the common denominator is stack assets, think long term, play the long term game, be patient, stay consistent, life has a funny way of working out if you kind of stick to those principles. Before we officially end this podcast, I want to just go around and see if you guys have any last comments for the community. Jumping into 2026 strong with some good momentum with the podcast, with the community. But I'd love to see if you guys have anything else, maybe any last thoughts to leave
Yeah,
our lovely
man.
listeners.
I think
Yeah,
you're
I'll let Fernando go first though.
oh
Cool.
no, you're good. I think mine's pretty small. I think listening to Josh, right? I think it's a prime example of what everybody wants, right? I think the freedom, financial freedom is what we're all here for. To be able to enjoy life, go on trips, and know that we made the right decisions and we built the right foundational systems and we're taking the right financial decisions, but not only by ourselves. It feels lonely when you're doing it all alone, but when you're doing it with a community, it feels completely different. You can share those results, you can share those trips, and that's what we're trying to create here in some way to be able to share everything together and also, give credit to the wins, right? Like people making the right decisions deserve recognition and reserve all that hard work that maybe nobody sees. Everybody sees the pictures, like Baafi says. Everybody sees the IG post, and maybe that's on Klarna or a firm, you know, and you don't
Yo,
know it's in the background.
facts.
Or it's a rental,
Or it's a
right? Let's
rental,
not forget
right?
that.
Yeah.
But we want it to be, we want it to feel real and free, like freedom behind it, where you actually worked hard for it and built a good foundational financial system. I think that's my words here.
Yeah, and I'll say that's the best part, right? Like we're gonna keep having guests on this podcast to show the journey,
Hmm.
to show the sacrifices people have made, to show both sides, not only the glamorous side, but also what it took to get there. That's what this
Yeah.
podcast is about. We're not gonna sugarcoat things. We're going into
Nope.
2026 strong, and man, I'm pumped up.
Yeah, man. Now that's awesome, man. Thanks for sharing that, Fernando. I think so. For me, I have two things I want to share, and one is more, I'll say, optimistic and hopeful. And one of my favorite parts of the year is seeing people share their accomplishments at the end of the year, right? Just to kind of seeing what they've gone through throughout the year, the goals they've set, how they've hit them, and it's not even just financial goals, just life goals in general, right? And what their next focus is as they go into the next year. So I would say for anybody that's listening out there, keep having the conversations, keep sharing your experiences, keep sharing what you're accomplishing, where you fell short, right? Where you saw an opportunity for growth and learning for yourself. Keep all those stories alive, whether it's having them with your family, with people in your group chat, with your social media and online communities. Keep sharing them, whether you're somebody who's also on their own journey and you're sharing and documenting that online and you're not getting as much engagement, you're starting something, you're not getting as much engagement, you put in tons of hours, you're up late, all the grind, right? Like the beginning stages, especially for Josh, myself, other people that have been running businesses for a while. Keep sharing them because that is literally the most important thing. That's the core, that's the authenticity, right? That's what actually helps people get through things. And you never know who's listening, who you're inspiring, who's learning from your journey and making and allowing that to help fuel their journey because maybe they don't have the best environment. They don't come from the best environment, or they have a lot of people with limited beliefs or negative folks around them, and they just need that extra oomph, which you pretty much just gave them without you even noticing, right? So just keep those things going. The second one is really a harsh reality, and it is more so for people that, and it's a really important message for people that are parents or want to become parents someday, right? Like if you're someone with kids already or want to have kids, this is really important perspective to keep in mind. One day you will have or already have a child or children, right? And they will grow up speaking about their background and upbringing and what their experience was like, which means you have an opportunity to build and shape not just the future of the next generation in your legacy and your family, but also the future of society, right? Like all the individual parts make up the sum. So a lot of the fucked up shit in society that we all deal with and face today is all our problems collectively and is our problems to solve collectively. We can't just assume that somebody's going to come and just do X, Y, and Z. We can't just assume that a politician is going to get in office and do whatever you think is best for you, your family, and your kids. That is part of our duty, right? So they're going to grow up and speak about their background. And if that's not executed properly, they will grow up talking about their poor background, and their poor background will be you and the choices you're making today. That is a very difficult mirror for anybody to face because the return on that investment is way more impactful than any amount of money you can give kids ever. Family is number one of the food chain. Is way more important and more valuable than anything else because when we do die, that's the only thing we leave behind. You can leave a house, guess what? Somebody will break down the house and rebuild something else on it. Right? You can leave behind a portfolio, but the portfolio is resources and a tool. It doesn't have a heartbeat. It doesn't have a brain. It's not blood pumping through the portfolio veins. There's a difference here. And I think a lot of times we get lost and not realizing we're so busy just hustling, hustling, chasing money, this and that we forget that the most important thing is our family and what we pass down in terms of life itself, right? So that's a big piece. And by poor, I'm not talking about just money. I'm talking about just the curiosity to learn, adapt, change as life changes, right? I'm talking about instilling by not instilling healthy habits, whether it's exercise, reading, eating healthy, poor in lack of confidence due to your own fears, right? Whether you consciously or subconsciously instill these, um, negative thoughts or mentalities in the kids or the future, from your own traumas and experiences and challenges you face growing up, right? Pour in over consuming things that don't add value to your life, right? The family life, rather than being intentional on things that really, really enhances and enriches the quality of life. Pour in teaching the next generation that there is nothing that's in their control, that the government, the rich people, everything is more conspiracy based rather than things that they can actually do. Like you'd be surprised, every kid, every person on this planet has some sort of gift, has some sort of skill, something that they've brought to the table that's been given to them. And there's a lot of rhetoric and teachings that alludes or highlight or make it seem as if they actually cannot do anything no matter what happens. And that is something that we need to really, really course correct in society, right? Poor in getting them, exposure to the outside, poor in not getting them exposure to the outside world for them to actually see, witness, touch grass, be around nature, be out in the world, help, give back, right? Volunteer at food banks at different locations, read to younger children, volunteer, help out the homeless, just do different things that give back to the community, right? Poor in not exposing them to the different ranges of life and not teaching them that everything is not about transaction. Everything is not just about a feeling. Everything is not about something that you disagree with means that you need to cancel everything, cancel everybody, reject society, and just be in your own world. And if something doesn't agree with what you agree with or what your beliefs are, that it doesn't have a place on the planet, right? Not teaching respect and kindness in our similarities and our differences. These are all things that kids come in the world as a clean slate and they're like sponges. They're like, you download all that information, and primarily they're going to download it from their parents, their family, and then the community, right? The schools, churches, you name it. You do not want your kids to grow up someday and refer to you and their entire life experience in a negative light. That is something that we all need to really take heed to. Not just those that want to have kids, anybody that's going to interact with other people's kids as well, right? Like we have a duty and a responsibility to children in this world. And if we're not careful, we're going to lose the plot and create a worse planet than we found and a worse community and a worse society than we found that we've been gifted with. I mean, look at all the things we're able to enjoy and do right now as a result of all the people that came before us. We need to do better. So we all got to do better. That's it.
That's, I think that's a perfect way to end the podcast. Baafi, like, well said. I mean, it's heavy, And it's a harsh truth, but I think especially as a parent, right? It's like, what example are you setting? Something to think about. And the good news is like even if you don't come from money, if you didn't get things set up for yourself, like if we all have some story that we can sit here and share of like why, things aren't as good as they could be. We could sit here for hours and complain about maybe where we come from, our background, like whatever it is, yada, yada, yada. At the end of the day, the only thing that matters is what you do now. Like, what are you going to control now? What direction are you going to head in today and moving forward? Like that's what you have under your control. The past is in the past. And Baafi, I couldn't have ended it any better. Like, what example are you setting for your kids, right? If you're going to have kids or if you're going to interact with kids, just well said, man. Market Hustle community, we can't end it any better than that. This episode 65 is officially a wrap. Do me a quick favor. If you found this episode helpful, make sure to leave us a quick 5-star review on whatever podcast platform you're listening in on. And also take some time. Take a few minutes after this podcast to, grab a notebook, pull out your iPhone, open the Notes app, and just write down a couple of things that you actually want to do. Make them tangible. Maybe it is starting your own Roth IRA for the first time. Maybe it's setting up a high yield savings account. Maybe it's listening to a few other podcasts so you can actually learn more of this investing world more deeply so that you can make better financial decisions for yourself and for your future family. The resources are out there. The tools are out there. The only thing that you could do, the only thing it all comes down to is what you're going to do now. Like what actions are you going to take today and tomorrow and into the future to change the path you're on or to improve the quality of your life? Because the good news is it's under your control, right? Like you have the power to change your life at any time. That's one of the cool things about being human. A lot can change in 12 to 24 months. And so take some time, 5 to 10 minutes to just write down some of the changes you'd like to make. And then, of course, once those are written down, you can take some time to think through the how-to, like the instructions behind that. But nonetheless, this was an incredible episode. I hope you got some value out of it, some good insights. And don't forget, if this is your first episode, we have 64 other episodes waiting for you. We've had some other incredible community stories, some incredible guests, and also just topics where we break down certain parts of the stock markets, whether it's the S&P 500, whether it's Roth IRAs. We got it all here. So take the time to go through these resources, take advantage of them, because the more you can control what you can control and take advantage of the tools and the resources in an intentional way, the tools that you have in front of you, whether that's social media, whether that's AI, like if you can use those in an intentional way, man, your life's going to look much different 12 years from now, or 12 months from now, also 12 years from now. At the same time, we want you to come on the podcast, right? We want to share it. We want to see your wins. We want to hear about your wins. And so the sooner you get started, the sooner you make these consistent habits and you implement the discipline and you take advantage of the tools and resources at your fingertips, the faster you're going to be able to change not only your own life, but your future family's life as well. So that's it for today. Thank you for listening. Happy New Year to the entire community. We'll catch you back on the next episode. Again, we're rolling into this new year with some crazy momentum. This might be our longest podcast episode ever. So again, the momentum's here. We're all locked in. And I look forward to taking on the new year with you all. Have a great rest of your nights, and we'll see you back in the next episode. Bye-bye.